Hello again, this is Alex with MasterChartsTrading.com, but this is market recap for Friday, September 21st, 2018. So we'll look at stocks, bonds, junk bonds, dollar, and then look at commodities and cryptocurrencies as usual. And let's get right to it. So S&P 500 at fresh all-time highs. Unequivocally bullish chart again. Good places to look for a buying opportunity would be around 277. That's if we get there. Most likely, if we even get to 286 levels, then the buyers would very likely step in. So basically, again, this is a uptrending chart, a chart that's going higher, I think, and we should look only for pullbacks to initiate new positions with the hope of those positions increasing in value. In other words, I would not open any shorts. I would not consider shorting it just yet. Foreign markets. So let's look at foreign markets. Let's look at Europe first. VGK or EZU makes no difference. Well, let's look at VGK. So VGK broke support, and I think it's currently on the avoid list for my thinking. So here on the 25th June, we have the breakdown and bounce, another leg lower, another bounce. So now we're again approaching these levels I call conservative short levels, currently around this red line 57.76. You can find out more about the lines on this chart, this green, blue, red, and yellow line, but by going to MasterChartsTrading.com, and then you can read up on those lines. So basically, they are these lines are used for, I wrote these lines, I wrote these indicators, and they're used for. You can look me up on TradingView at MasterCharts as MasterCharts. So they are used for support resistance, and currently European equities are coming up on the resistance around 57.76. So here I would either just do nothing, or potentially if you are sophisticated enough, then you can buy puts, or you can short, or you can buy an inverse ETF. Here's the emerging markets. This one is significantly weaker than the European markets. You can see a low here on September 11 and then a bounce back. So we're not even close to the conservative short levels, which are currently around 44.90. But this rebound is continuing, and basically we'll need to let it run until we see a rollover, and I personally prefer to go short on a breakdown below my own indicator line. So for example, if we come up to above 44.90, like $45, and then we would have a strong selling candle, kind of like what we had here on the 23rd of August, and then there's another decent one here on the 30th of August. So this is a strong selling, indicative of strong selling, and then I will be looking to potentially short this chart. So European shares rebounding, emerging markets rebounding. Here's Japan. Japan is also bouncing. Japan is stronger in my opinion than other countries, because you can see we did not have a close below the yellow line. In other words, we didn't make a new low here, and now we're bouncing. So overall, this is not a bad looking chart, and I would be potentially looking to buy it around 61 or so. So Japan is rebounding. Europe is European and emerging markets. I'm still avoiding potentially shorting. Like emerging markets could be shorted, I think, at $45. Could be a lucrative opportunity if it gets there. All right, let's continue to bonds. All right, let's move on to bonds. Here's TLT. So significant selling here. If you listen to my previous videos, on the 31st of August I put this arrow there. I like this strong selling and you can see a significant follow-through afterwards. So overall, pretty much it looks like TLT that the long-dated treasuries and bonds of all kinds except for junk bonds are in a downtrend, in a bear market, and you can either avoid them or short them. So again, there was a conservative short levels right there, a breakdown below them on the 18th of September. I would, again, I personally prefer to see a deeper pullback. So here, maybe something similar from what happened during the beginning of August 2018, and then we can see a strong selling candle and then a follow through to the downside. So overall, I think this is a bearish chart. Let's look at investment grade corporates, LQD. Also pretty weak, never even got to this red line, indicator line. You can find out more about these lines at MasterChartsTrading.com. Click on alerts and indicators. And here is overall bond market, also approaching fresh lows. So again, pretty unequivocally bearish chart. I was thinking that maybe bonds have bottomed. So here's TLT. If you listen to my videos here, I was really not sure about what's happening to bonds, especially around 17, 18, 20th of August. But then we get this selling, and this selling just nailed like a nail in the coffin of TLT. Here's TYX, which is a 30-year treasury yield, and it just hit a fresh 52-week high at let me see, high at 3.248%. So it doesn't look, I mean, it does look like bonds have now are in a bear market basically. So as bonds move lower, TYX or treasury yield moves higher. They opposite to one another. So we can expect possibly a pullback for treasury yield to maybe 31.50, 3.154% here. Maybe a little bit deeper, but I think the overall trend is up, and I think that would imply either avoiding bonds or shorting bonds. Not all bonds, for example, here's junk bonds, they're not really created equal to the investment grade corporates. So junk bonds correlate strongly to the stock market. In other words, they move together with the stocks. And you can see that JNK is kind of approaching this support resistance levels at 3604. You can see it clearly visualized with this red line. A breakout above this line, we can see this similar pattern on HYG, but you can see that HYG looked stronger actually. And you can see a breakout above this red indicator line. Additionally, here on the 4th and 5th of September, the fact of the lack of follow-through to the downside could mean that junk bonds are indeed bottoming. The price action doesn't need to be that strong. All that needs to happen is for this particular fund move another 0.84% to the upside to about $87, and I think at that point we can say that the market has indeed turned around for the junk bonds, and now we can see appreciation of prices of junk bonds. Okay, let's continue to the dollar index. So here's DXY. So I think dollar is bullish. Again, the 4 lines on this chart, you can find out more about them by going to MasterChartsTrading.com, looking for my indicators there. Also, you can look at same indicators on TradingView and look for me at MasterCharts. Here are those indicators, and I can share these indicators with you. All I need is your TradingView user ID. So you can see that the breakout on dollar index occurred on the 28th of May 2018, and from then on we basically just look for buying opportunity. So it seems to me like the dollar is coming down exactly to that opportunity level, and I think we may see like a spike below this blue indicator line and then a rally higher. I think this is still a bullish chart. It would also imply that euro and British pound and Japanese yen and Swiss franc, they're all in a downtrend versus the dollar. XAU USD, you can do a GC1 exclamation point, so gold futures. Again, this is a bearish chart, pretty obviously. Where to short it? Well, some people like to short it really aggressively here at the yellow line. I personally don't like it. I personally prefer to see a higher bounce to like 1243, and they keep saying the same level. It's just because it hasn't really changed much. So let's look for that rebound. GDX, kind of same overall pattern. We can, again, we're looking for a short setup, and for that the price needs to travel still to around 20 bucks or so. Then I would probably look for a shorting setup. If you don't understand how to do that, find out more at MasterCharts Trading. Okay, so let's continue. We have gold. Okay, let's look at oil. CL1 exclamation point. Bullish chart also. So far I don't see too many issues with this chart. We didn't really come down where I wanted it. We almost came down to this level of the blue indicator lines, but then we kind of rallied even before they were touched by the price. Again, a pullback could materialize around 65 bucks, but I would be looking to buy it there. Natural gas, NG1 exclamation point, one of the most volatile instruments out there. So if you better know what you're doing when you're trading natural gas. It's very easy to lose money and get wiped out. So here I actually had a trade UNG. I bought UNG puts on the 15th of August, right there, and the puts went in my favor. I sold half of the position, and then we had like a bounce here, and I got stopped out. And if you listen to my previous video, I was saying, oh, I wish I didn't get stopped out because it looked like the price followed through to the downside. But no, notice what happened afterwards. It really rallied afterwards. So you can see the lines on this chart, the blue, the green, and the yellow, and the red lines. They are not as meaningful as if you were to look on NG1 exclamation point chart, natural gas futures chart. So when I trade natural gas or commodity of any matter, or Forex, I prefer to look at the chart of the futures of the corresponding instrument. So in this case, the corresponding instrument is NG1 exclamation point, or natural gas futures. And I shorted natural gas futures right there on 15th of August via buying UNG puts. So you can see that if you are doing something of similar nature and you have a futures account, this would have been a very nice gain for you. Now notice that the big rebound, and now we're trading above this red line, so I'm not touching it. I want to see a close below 2.954, and then I would be okay. Yeah, maybe we can buy a put or something of that nature. Okay, so we got natural gas, oil, and gold we looked already. So let's look briefly at Bitcoin. And Bitcoin is kind of interesting. It's in a very interesting kind of place where we're seeing the narrowing of the trading range. So what I mean here, you can see that the indicator lines, this price action indicators that I have on the chart, that you can see the green, blue, red, and yellow lines. So notice the distance between the yellow and the green line is currently $5,100. Just a few weeks ago, that same distance was actually almost $9,400. So this is a trading range narrowing. And a lot of inflection points do occur during the inflection or the narrowing of the trading range. Why? Because you notice that the price right now is at 6,700 here, and for that 6,700 price to travel towards 10,000, which I would consider bullish levels, would not be that big of a fit, because it's that would mean like a $3,500 move, versus before, to move from the yellow to the blue indicator line, it would have been $6,500 move. It used to be a much bigger move. So it's possible that we're approaching an inflection point, and I'm fairly certain that the price of Bitcoin will rally in the next few weeks to a few months to at least 87, and that's where I think we will see bulls and bears battle it out, and I think we can see either a rollover or another breakout. And if that breakout occurs, we can see a further follow through to around 10,600 or so, and that could be a beginning of a new bull market. It's not out of the question. I like the way the trading range has been narrowing. Here's Ethereum. We can see also trading range narrowing. You can see the green line is coming down. LTC USD, also trading range is narrowing. Notice how the lines are getting closer together versus what used to be here. XRP USD, Ripple, notice again, same thing. See how the lines are really coming closer together. So the price has less distance to travel towards bullish levels. Anything is possible. EOS USD, don't see a price range narrowing just yet. Okay, that's it for this week's recap. Again, please hit the like button, also share this video with others, and then also head over to MasterChartsTrading.com. That's MasterChartsTrading.com. Click on alerts and indicators and sign up for one of the levels. So alerts only, and you can see alerts and indicators on a monthly or a yearly basis. So if you have any questions, again, you can also contact me. And then that's it for this week's recap. Thanks for watching, and have another great trading week. Bye-bye.